we do from the standpoint of mindset development. Everything that you want to do in life, anything that you want to accomplish, you must have that mindset. You must have the mindset to know that you know that you know that you are going to be successful. You have to know that you know that you know that you have this and you can accomplish it. So let's see who just joined us. I see Virginia, Cleveland, Moultrie, Buffalo, New York. So just keep dropping it in the chat. So let's go ahead and get started here this evening. Once again, my name is Tasha Untitled Trade Whisper, creator of the BYOB cash out strategy that we are talking about, that we're going over, that we are utilizing today. And so I just want to welcome each and every last one of you all. So now, if this is your first time with us this evening, this your first time, good evening, Jacksonville. This your first time here this evening, Virginia, good evening. Let me get a 111 in the chat, 111 as you continue to log on. And if you're still learning how to cash out, let me get a 222. All right, welcome back, welcome back, welcome back. Welcome, 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 and welcome back, everyone. Welcome and welcome back. Now, what I'm going to do is I'm going to go ahead and share my screen. Good evening, Tavares. Good evening, Chicago. I am going to go ahead and share my screen with you. And as I share my screen, I want to explain to you all, we have quite a few new people on here, and I really want to explain to you all exactly how this call schedule works and exactly what we do. Now, you just made an affirmation. Good evening, Akron. You just made an affirmation, right? You just made an affirmation that you are a master, a BYOB master trader. You made an affirmation that you are the signal, right? Those are your affirmations. And understanding that those are your affirmations, you want to make sure that you are empowered. So this movement, good evening, Akron. Good evening, Detroit. So this movement, Be Your Own Bank, this movement is 1 million families, hear this, financially educated and impacted. So what we do and everything we do is geared for your success, okay? How we train, how we trade is geared for your success. This is the year of transformation. And understanding that this is the year of transformation, this is where you lock and load. This is where you take everything that you experienced in 2020, because we asked for 2020 vision. Now, you know, if your vision is not clear, if your vision is not corrected, then it's going to have to be corrected. That's life. You see people walking around in glasses all the time, and that's because their vision had to be corrected to obtain that 2020. That's what happened to us last year. So we got what we asked for. We asked for a 2020 vision. So we got the correction. And so now that you know what needs to happen, it's time to put it into action. And that's that transformation. That is exactly what this is. Now, so the evening Jacksonville. So I have the excuse eraser and I have my 11-year-old. So yes, I love it. I love it. I love it. This is so no excuses. So now what I'm getting to is how these calls work. So these evening calls, and yes, these evening calls are recorded. The morning calls, however, are not. Okay, the morning calls are not. But what we do in the morning is we take what we learn in the evening, we take what we learn on this call, and then we implement it and show you how to trade it. You know, I tell you all the time that you don't want signals, okay? We don't want signals. We don't want somebody feeding us. If that's the case, you can keep your job. You know, you are allowing someone else to just control the narrative of your life. Will you have success? This skill set is going to free you. This skill set is just going to free you financially to where this is it. This is what you do. This is your life, and anything else that you add to it is because you want to and not because you have to. And so our focus is really empowering you. And that's why we share with what we did on Tuesday, because you need to be free totally and completely all the way around. And so just make sure you get registered, because it's only 24 hours left for that special. So if you missed it, it's already uploaded Tuesday night. It's in the Telegram, it's in the chat, the Facebook group, everything. So you definitely want to make sure that you do that. So let's go ahead. This is what we're going to do tonight, okay? And if you have questions, comments, testimonies, I definitely need you to drop it in the chat, okay? I really want you to drop it in the chat. But what we're going to do tonight as I promised you all that we were going to analyze this currency pair. So this was literally the perfect storm. This was literally a beautiful trade. And so we were going to come back and analyze it because this tool, okay, this tool, the Vibrata, is really powerful. And we get the 5-minute alerts. And of course, tonight while we're talking about it, we have 4-hour alerts. So my swing traders, you see some momentum for you. But you know what, of course, normally, let me take those higher time frames off because, you know, normally it's all 5-minute and everything. So taking those higher time frames off, you notice that when you come through here, you see a lot of 5 and 15, but you see more 5-minute triggers. And understand that these are not signals, these are alerts. So it's a potential buy, a potential sell. And so I want you all to know how to use this effectively. And that's what we're talking about tonight. So before we dive into it, what I'm going to do is I'm going to make sure that you all know how to trade the strategy. I mean, it's three simple steps that you want to utilize. And so with those three simple steps, is really here to empower you. So before we really get started, you know, I've been talking about the year of transformation, and we've been talking about what actually transpired on Tuesday that we want you to go back. And so before we really dive into this right now, I want to let our visionary, I see his mic. So go ahead, Mr. Rogers.
Yeah, I appreciate you taking time out your schedule this evening to kind of take the time to help everyone really understand how to effectively utilize this tool as well as the strategy. But I also want to make mention, I mean, you guys did an amazing job 2020, being able to navigate the market, you know, during the pandemic, so many things that you really began to ride the wave of the market. But I also want to make sure that you're completely aware. So there's some things that have transpired via news regarding a possible stimulus package. You know, we have a different administration coming, so we're going to have a different philosophical approach. So for the next several months, there's going to be a lot of fundamental things that are going to move the market up and down. So just mentally be prepared for that. As you're going to see here shortly, there's going to be a move. So there's going to be a tremendous, I guess, a choice between a bearish market and a bullish market. So I just wanted you to be extremely cognizant of that as you begin to understand. Once again, the inauguration is next week, but there were some announcements made about the potential 1.9 stimulus package. So just be mindful of that. Once again, we want to make sure that we're calm and cool. We understand that we do not trade with our emotions, because you are master traders. You are the signal, but that's just an additional arsenal that I want you to be completely made aware of, so that you don't get emotionally involved, but realize that there's definitely going to be a philosophical change, and that's going to be very pertinent to, particularly for those who have been taking advantage of the indices in that regard. So I just wanted to make sure that you put that in your quiver tonight as Ms. Dyer begins to really take you on a deeper path, because this truly is a year of transformation. So you're transforming into that the greatness and the evolution of what you already were, but now we're going to bring it out in full manifestation, and you're going to be able to operate in that level of excellence, because excellence is the standard. Excellence is the standard, and when you operate as the standard, then you're going to always get the right results from a production standpoint. Back to you, Ms. Dyer.
So no. He's not saying more trending. Okay, let me break down because I do have it up. So what basically, before I even get started, let me go ahead and answer that question and kind of follow up with what he was just saying. So if you recall last year, right? You recall last year as we were trading, there are different types of markets, okay? There are different types of markets that you can trade. You have your political, you have your economics. So those are the different types of markets that are out there. And when you understand the different types of markets, you always know how to trade. And so what we did is we put an emphasis on understanding a political market, a geopolitical market. And so when you understand what's happening, then you always understand how to navigate the charts. So when you know what's happening. And so that is why, if for those of you all who are plugged in to BYOB, you all were in profit, is because we took the time to help you understand the type of market we were trading in and how to navigate it. And that goes back to what I was just saying. It goes back to understanding that you are the signal, right? That is why that's so important. And you're not just getting fed from someone else, is that you understand how you're feeding, you know, what it is and what you're doing in the markets. So just for understanding, because I do have it pulled up, you know, I actually have it here, you know, what we were looking at earlier. So let's just kind of go back to this, okay? And then I'm gonna dive into, you know, because basically what Mr. Rogers was just sharing with you all, you know, I'm gonna go ahead and address this, and then we'll go back to understanding how to effectively utilize the tool. So now, this is I'm on an hour chart. So remember the news and everything that we were waiting on this morning's call. So what we do is we understand and we train to the technical market, right? Technical analysis. That's what we do. And that's what I'm about to show you is technical analysis. There are fundamentals that take place. So just so you understand what those mean, right? So you understand what those mean. That literally means that I have my technical analysis, which is my blue line cross over the red candle, green candle, flat top or bottom, piece or flip. I'm going to explain that so you all understand exactly how and what I'm saying. For those of you all who are new to this call. Then you have your fundamental analysis, right? You have your fundamental analysis, which is an event that transpires. And then you have the sentiment, which is how you feel about it, right? So just for example, if I was to put that into perspective, you all know that I have a first grader, you know, and if you've been on any one of our morning calls, you know I have a first grader. So with that being said, you look at, if I put it in perspective, my technical analysis is she's zoned for a certain school district, right? She's zoned for that. So she fits the criteria to go to school. So that is the blue line cross over the red, the candle with a flat top or bottom, piece or flip. She fits that criteria to be in the first grade by age, you know, grades, how long she's been in school. She fits all of that. However, my fundamental analysis is COVID. So COVID happened, right? COVID happened. And so that brought us out of the classroom. And so where parents had to make a decision this school year, but last year, everyone was out of the classroom. That's my fundamental analysis. So that can have impact to what the markets were doing and what it was already doing. Then my sentiment is how you feel about it. So based on who you are, you're going to feel a different way. You had some parents that were agitated and upset, and then you had some parents like myself who it didn't bother because I'm economically unbothered. You know, I'm home. I can make the adjustments where everybody can't do that. So how I feel about it is not the same the way that someone else feels about it that lost their job and now you have a child at home and what am I going to do from that perspective? So that's what that means. So for example, as we look at, this is the Dow Jones, this is the US 30, this is the chart that we're looking at, okay? And so I definitely had this pulled up for you guys to really share with you. Now you see the drop, look at how far it dropped. So when that stimulus package was announced, this is what he's referring to. When that stimulus package was announced, the market fell. And so what you'll normally hear is, what you'll normally hear is, guess what? Oh my gosh, did you see it? My stocks, my this, my that, my 401k. Oh my gosh, oh my gosh. Well, because you understand that you are your own bank and you understand that we make money whether it's going up or it's going down, no matter what the market is doing, you are actually in a position to where you can make a withdrawal. So it can come back down here. Let's take a look at what happened. Okay, let's go to the daily chart. This thing can come way back down here to where it was with COVID. Okay, so let's go back to COVID. Okay, look how far down this is. So just look at this and look how far it's actually come up. So I can come all the way back down here. Look, this was, you know how much money we made last year, almost around this time? Do you really understand how much money we made? This is that drop. Look how far COVID dropped the market. So this sale where everybody was spazzing out and, very concerned, that drop was beautiful for us. And because you are your own bank, you actually understand how to navigate the market. So this was, I just can't say it enough. It was beautiful. So now, and look, 777 is on the train call. So as you understand that, and as you understand, and that's why, look, so I'm sitting here, I'm explaining something. You got a 777 in the chat. You understand the power behind that? You understand the power and what's being said. So it's always important, and that's part of what we do. And so now the market is coming back up, and the market has been steadily rising. I mean, it's the highest it's ever been. But yet now, because that stimulus package was announced today, it took a nice fall. It took a very sharp fall. And so, that's a significant amount of money. That's a very nice fall. And so, but yet I did see US 30 777. I did see, gold 777. That's why it's important to be educated. That's why we do what we do. So that's really, where I really want to take you. So, I definitely had this up to have that conversation with you all. So I want to thank Mr. Rogers, once, as Dr. Bythewood would say, the collective consciousness. So this is, you see, it's already up here. So that's just the collective consciousness. And so it's just really important for you to understand. And as we look at it, it's still selling. And so if you can kind of see where it's going to break this zone, it's still selling. So that's really what that means. And so hopefully, that answered your question, about understanding the markets and why it's so important. So going back to what I was saying is, what we do is we really help you understand how to navigate the markets. And then in the mornings, we navigate the markets with you and analyze the charts and see what's out there and kind of get us set up for the day. That's what we do. Okay, that's what we do. Now, let's talk about the strategy. Let's talk about the strategy. And of course, if you have questions or comments, I want you to drop it in the chat. But what I also want you to understand is, while you're going through this and as you understand this, that what I'm explaining to you as far as the strategy is that the basics, meaning that once you get enrolled and you go through the academy, or you're learning, you're brand new to BYOB, whether you've been trading in the past or not, what you understand is that within 14 and 21 days, you definitely can get in the market and you'll be able to start taking trades. You'll be able to start saying, okay, this is a take, this is a trade. I can see this, I can see that, because that's going to happen. But I don't want you to stop there. Okay. I can't emphasize that enough. And that's why I'm going to show you tonight how this tool works, because the more you know, the more powerful you are. So you always want to add to it and build on top of it. Okay. So let's talk about it. Let's look at it. So my stochastic, right? My stochastic. The stochastic is always, my stochastic is always around the 80 or around this 20. You see these numbers that run across the side. So it runs from 0 to 100 down here. This is the stochastic. We're using three simple indicators. And so with that, with those indicators, right? With those indicators, you want to make sure you look at the stochastic first. So yes, exactly, applied knowledge. So understanding that I am looking at the stochastic first. I'm human. I do it. Whenever you pull up a chart, you look at the candles. I mean, that's just human nature. That's just what we do. But you want to shift and make sure you understand before, you start coming down here. You want to shift your eyes down here and see what's happening. The stochastic is a momentum indicator, okay? The stochastic is a momentum indicator. So what you're seeing is, you see this blue line cross over the red and an upward momentum. You have the blue line cross over the red and a downward momentum around the 80, around the 20 for the buy, around the 80 for a sell. Now, you notice that we're also on a 15-minute chart. 15-minute chart, 15-minute chart. So now then when we're sitting here, and you have you're looking at this, and of course, as I'm looking at this, you have the green candle with a flat bottom. So once I identify, right, once I identify that blue line cross over the red and upper momentum, look at where this is. Okay, look at where this is. So as that crossover happens, I'm not ready to take a trade. Look at that. You see that? That's not a flat bottom. And so if you look at what's underlying is my Japanese candles, okay? I see Japanese candles. Now, what the Hikanashi candles do is they interpret, right? They translate for you. So you don't have to sit there and I'm trying to, oh, what kind of candle was that? And we have training on a YouTube channel that really talk about how to read the candles. But but understanding the Hikanashi candles, look how nice and smooth they are. And this is why I love them so much. So this wick on the bottom of this candle simply means that there's too much resistance on the sell. So I don't want to take that trade. When we get that flat bottom, it's either gonna break through that support and resistance line or it breaks through, what regardless of what direction. So these lines are the support and resistance lines, okay? And we will, if I don't think we'll have time to do all of that tonight, but we will come back next week and we'll break that down too. We're empowering you right now. And so now, as you look, you see that blue line cross over the red and an upward momentum. Now I have a green candle with a flat bottom, that's right there. And then of course that dot, okay, the dot, the PSAR flips. So right here. So all of this in alignment, okay, all of this in alignment, this is the strategy, the BYOB cash out strategy. Now, okay, now, two things. I need to do my time frame confluence, and you need to understand stop loss. You need to understand how to take the trade. So let's look at my time frame confluence. So actually, let me do this first to make sure we cover it, because you guys know you start asking questions. And so your stop loss is always below the PSAR, the dot, which is it's like a trailing stop loss that moves with it. So you notice that in between here, that sometimes the candles correct, and when they correct, and they hit it, they'll touch it, but they will not go outside of the PSAR. That's why your stop loss is outside of the PSAR. So the wick at the bottom, don't try to figure out like the wick, that means this is a green candle, which means buy. But if it has a wick on the bottom, there is a lot of it has too many sellers in there too. So the green candle means buy, but there are too many sellers. So that's what's pushing it down, or vice versa. So it's not smooth. So that's like a corrective action. There's resistance in it trying to move up. That's what I'm saying. So now now as we understand that this is moving up, your take profit, okay, is 10 pips and cash out. So it's 10 pips and cash out. So it doesn't matter how far below. No, it doesn't. That's your personal risk management. You can do 1 pip, you can do 20 pips. It's completely up to you, right? So whatever your personal risk management is, and you always want to trade, like we've done the compounding sheet. We've trained on the compounding sheet or to show you how to multiply your money. But we compound out. So it's beautiful to understand that you can actually compound in, right? So we've studied that. But also what I want to highlight, is you can do your 10 pips and cash out. And what you do is I can take it to 10 pips, or I can take it to the first support or resistance line as you learn the support and resistance lines. Now, if when you grab it from here and you have a call price, because some of you are still working on your pip reaction time, you can use that call price to add your 10 pips. Because sometimes what I have seen is it takes you a while to get into the trade. And if it takes you a while to get into a trade, you don't want to add 10. We're on GBP USD right now. So, and I've actually dropped that in the chat. We're going to stay on GBP USD right now. So stay focused, stay focused, stay focused. So now, when you add those 10 pips, some of you all will add the pip reaction time is how long it takes you to get into the trade. So if you're already 5 pips up or 8 pips up from, where you were supposed to be, as you develop your skill set, of course, as you develop stay focused on what we're talking about, as you develop your skill set, then you are definitely going to, as you develop your skill set, then that pip reaction time will decrease. So, and I'm gonna go ahead and say this, is I'm trying to cover something right now, and some of the questions have absolutely nothing to do with what we're talking about. And I want you to think about that, because if your mind is everywhere while we're training and what we're talking about, then you're going to have questions on what we're training about and what we're talking about. Because what I want to do right now is show you effectively how, don't apologize, it's you really need to understand. Because how do I effectively use this tool? How do I effectively use this tool? And so the other question is, are the pips the price? So along on the outside, right? On the side right here, this is the price. Along the bottom is the date. So this is the actual price of this currency pair. So this is British pound, this is US dollar. These two currency pairs, this is the actual price, this is the actual price for that. So no, not for that, not for this particular buy. I'm using this as an example, but I do have and I want to show you like the harmonic scanner trade that we took, but I wanted to make sure you guys understood that strategy first. And I'm gonna go into that in just a minute. So when we do our time frame, oh no, don't do that. When we do our time frame confluence, hold on, why did it get so big? Okay, so as it's reconnecting, Zoom kicks me out periodically. So that's why you see me logged on with two devices. So I cannot explain it, and it just kicked me out. And so it's logging back in right now. So give me a moment. Give me a moment and it'll be back on. And here we go. All right, so I am back. Let me get my screen share together. All right. So as much as I've updated Zoom, I cannot explain why that happens. So, and I still have all of my chat. Awesome, awesome, awesome. So now what I was saying was, let me go back, and that would explain why that happened on this pair. So let's go back and let's look at this on a 15-minute chart. And I'm just going to put an arrow underneath here. So we're starting over. I wonder why the arrow got so big. So now let's go to the hour. So from the 15-minute, it's what you call a factor of 4, 5, or 6. So that means I'm going to, that means you multiply it by 4, 5, or 6. So just remember 15-minute, I go to the hour. Now, when I go to the hour, look at this candle. Okay, look at this candle. So this is not something I'm excited about. So I'm just gonna drop down. Tonight, I'm gonna leave off that exception to the rule. We're gonna stay focused on here. So I'm gonna go up one more candle, which it was just another 15 minutes. Okay, actually, let me just move this over. Let me see. So you can see when this candle moved up. Now this one, technically, could I have taken the trade? Absolutely. But I want to address trading styles. Some of you are aggressive, some of you are conservative. You just need to know your trading style. I mean, that's the bottom line. You just need to know your trading style. So for those of you all, and what I'm doing right now is I'm training for a conservative trading style as opposed to an aggressive one. So for those of you all who are aggressive, you would take the trade right here. And I did say I'm gonna skip it, but I'm not gonna get deep right now. But if a GBP, because of the amount of liquidity, I just gave you the time frame confluence rule, but GBP allows me to drop down. So here on the hour, you see you'd be able to take that trade. So basically, I'm in that buy, but when I come back over here, it needs to still be buying, okay? It needs to still be buying. I mean, it needs to be setting up, look like a trade that I would take. And then when I drop down to my 5 minute, when I drop down to that 5 minute, it will need to be buying. We know I needed to move over because that candle had a wick in it. So this is where we would be. All right, so it needs to still be buying. So voila, BYOB cash out with time frame confluence. All we did is real simple. I look for a trade. I have a candle with a flat bottom, a PSR flip to the bottom. On the higher time frame, it needs to look like we're about to buy. And on the lower time frame, it needs to still be buying. It needs to be buying as well as it is on a 15. So the 5 minute would need to also be buying, and the hour needs to look like it's going in for a buy. It's really just that simple. Now, as we understand this, right now, what we always do is, this is what I need for you all to understand: the higher time frame. So that's the strategy. But I want to spend time on this tool. And that's why this line is here, right here. Because if you notice, this was a beautiful uptrend, okay? So these prices are where the trigger prices from the harmonic scanner. So, and so what these are Fibonacci points, but this is where we marked it up from the harmonic scanner. Now, I believe it actually sold before it came back up. So it might have actually been back here somewhere. But I actually want to focus on this buy. So if I'm looking at this, I mean, look at this. We talking about, let's just say 200 pips, because it's a little bit over. So as I'm looking at this and I understand that it's 200 pips, I mean, that was a beautiful movement. I mean, so many of you all made so much money that day. Now, and you still turn around and made money today. I already know you did. So, but as I'm looking at this, I want to understand, because two things happened, two tools triggered it. All right. We went to the harmonic scanner and we had a harmonic pattern for a buy. So we knew that we had a buy set up and we marked this chart up. And so you know that we were buying, or it was getting ready to buy, or it should be getting ready to buy, because you still need to analyze it. You don't just blindly take that trade. Now, when we came back to the Vibrata, it had multiple triggers, okay? So you see this is GBP USD and it's saying it's going to sell right now, but it had multiple triggers that, if you remember when we were on the calls this week from Monday and Tuesday, you know, this thing was nothing but GBP USD, you know, and like GBP AUD right there, but you see how it was GBP AUD, and it's like even the euros. So right now, what's being triggered consistently are the euros. So you can come through here and I see euro, this euro. So, but this day we have GBP USD. And so understanding that, like, how does that work? So now what we know is that in a trend, and you know, GBP is normally a little bouncy, but in a trend, in an uptrend, you have it's going to go impulse correction continuation. And so what is that impulse correction continuation? What is that? So if I was to actually add some more lines on here, so I'm gonna change the color. Like I said, we'll talk about support and resistance lines again. You know, we'll kind of dive into that. So I'm gonna change the color so that I'm gonna mix up with the other lines that we have on there. Anywhere this touches is, you know, what their touches. So next week we'll cover this again. So, but anywhere we have these touches is a support and resistance line. Multiple touches. Anywhere you see the market kind of pause, that's what we call a support and resistance line. And it's either a support or a resistance just based on the way that it hits. So right here it happened. We have some more down here, you know, so we were to come over here, you know, look, I have it hitting right here, it's right here, and it's also right there. So you can see all of that that's happening in the market. So I'm not going to draw too many to make it look like a coloring book, but I'm trying to emphasize a point right now. You notice that, and let me actually come to the 4 hour. Look how nice and smooth that looks on a 4 hour, right? Just really beautiful. Like it's just a straight up, it just shoots straight up. The higher time frame is really what the market is doing. I say that to you all the time when we're taking our trades or when we're analyzing, we're looking from the perspective of where are we at in the market, okay? Where are we at? Where are we at in the market? So wherever we are in the market, so if we were here, when we say look left on a 4 hour time frame, that would mean this is my left. So what is the highest point to my left? What was the market doing to my left? So when I'm looking to my left, that's what I'm doing. You see that look left. And so you notice that in that range up until that point, this was just, look at my stochastic on the 4 hour. It was nice and smooth. So you notice that when you're on the 15-minute or the 5-minute, and you say, well, wait a minute, the stochastic isn't in, the stochastic isn't here, because, and I'm like, don't overthink it. Start here with what I just explained to you first, which was, blue line cross over the red candle flat top, green candle flat bottom, PSR flip to the top or the bottom. That's what we're looking for as we learn. As we develop our skill set, you see, look at this nice upward movement right here. Now, I drew these lines so we can stay in between these boxes and you can see what's happening. So when I come to my hour, right, when I come to my hour, you can definitely see that same upward movement. Now look at my stochastic on the hour. I had my nice move up and then it just went sideways, okay? Because we were overbought on the hour, but the 4 hour was still in a nice upward trend, right? That's where my 4 hour was. Now, you're starting to see more definitive, like the 4 hour was just nice and smooth. Now look at what's happening on my hour. We're starting to see the activity in the market. That's what we're starting to see. Come on down to the 15-minute chart. Now understand, for those of you all, the candles, like when we say the chart, that means that every candle is 15 minutes. On the 4 hour, you get a new candle every 4 hours. On the 5-minute, you get a new candle every 5 minutes. That's what that means. So now, when I'm on the 15, I get a new candle every 15 minutes. You didn't see one sale on the 4 hour. I didn't see one sale on the 4 hour. I didn't. I see sales and I see buys and sales on the 15-minute. And so when we're talking to you all, and I'm like, you need to know if you're trading with the trend or counter trend trading, this is what that means. Because if I'm trading with the trend, then we know that the market's in an uptrend. So if let's say your trade plan says you don't trade against the trend, you only trade with the trend, you don't do any counter trend trading, then the only thing you would take during this time frame is a buy. But some of you all, my more aggressive traders, will actually come in and try to take a sale sometimes. Those trades, you're only doing 10 pips and cash out, period. That's what you're doing. But understand that they're a riskier trade. If you trade against the trend, it's a riskier trade. Understand the trend is your friend. Okay. But now you can see where it's getting hooked and where it's getting stopped at every support line. So there are resistance line as I'm going up. So if you see, it's getting stopped right here, it's getting stopped right here, it's getting stopped right here. So there's always some hesitation in the market at a support and resistance line, always. So sometimes you'll get the triggers on the 15. However, most of them come through on the 5-minute. And so we already know, right? So let's look at the 5 minutes. So now we have a candle every 5 minutes. So in this zone, now look at it. Now even look at the stochastic, up, down, up, down, up, down, up, down, up, down, right? So this is why time frame confluence is so important. So now you get why time frame confluence is so important. Because look at this. I have a blue line cross over the red and a downward momentum. I actually have a red candle with a flat top and a PSR flip. So now you know why that time frame confluence is so important. So on the hour and the 4 hour, what do we just see? That everything was in a buy. So that everything was in a buy. So you see what, you can kind of see that. So no, the harmonic scanner does not care about that. It doesn't care. The harmonic scanner only calls harmonic patterns. So it doesn't matter where it is. If it looks for harmonic patterns, and that's what it pulls. So like when you're in the academy and you have that area and they walk you through and they're training on identifying and how you find the harmonic patterns, you can either do it yourself or you can go to the harmonic scanner and kind of see. But this will explain why I only pull from the hour. So everybody has their own preference, because I've had individuals ask me to pull it from the 15-minute as well. But understand that this could be a harmonic pattern on the 15 for a sale, when it's really telling you to take this sale, as opposed to, but that's why we bring it back over here and really have to understand where we are in the market. So with that being said, let's take a look at this. So let's take a look. Let me break this down and then I'll come back to those questions. So now, these are where the triggers happen, okay? These are where the triggers happen. These are where the triggers happen, okay? These are where the triggers happen. Now, understanding that this is where the triggers happen in the market, okay? This is where those triggers happen in the market. And so this is where you'll see that it's calling for a buy on GBP USD. So what we need to know is that when so the 5 minute, once again, is all the activity. You notice on the hour and the 4 hour, this little area was just straight up in a buy. That's what it was. It was just straight up in a buy. So if I put a little circle around here, all right, because I really want you guys to really be able to effectively use this tool. So if I put a circle around this little area right here, okay, you see that this is when I say it's always caught in a correction. You know, it's always caught in a correction. This is where the vibrato would trigger, right up in here, okay? The vibrato would trigger right up in here. That's where it would trigger. So let me put some color to that one. So that's where the vibrato would trigger, all right? That little area right there, and it would trigger for a buy. So, and this will help you guys understand why when it says buy, you just take a buy without doing any analyzation. You're like, well, it didn't work out for me, or it's always going in the opposite direction. Well, this is why, okay? This is why. Because it triggered, this says like this right now, it says for a sale. So if I was to come over here and I was to look at this, okay? We're gonna go back over there, but if I was to come over, you know, it's a lot of candles we gotta get through. Now look at it, just triggered for a sale, but what is it doing? It's buying. Because on a higher time frame, right? If I look on a higher time frame, it's in a sale, right? It's in a sale. It's always called in a correction. And so what's happening is exactly what we're explaining right now. So let me come back over here and get back in the zone. And now look at that circle. So even on the 30-minute, right? Even on the 30-minute, we saw it selling. So even on a 30-minute candle, we don't see it selling. So once again, we had no time frame confluence, so we would not be taking a sell. We would not take that trade. I don't care how beautiful it looks over there, we would not take that trade. So I come up here to the hour, all right? When I come to the hour, let me find where we are. Now look at this. Look at how nice, you don't even see the correction on the hour. You don't even see it. So this is why so many triggers happen on the 5-minute. So when I come down to the 5-minute, all right, when I come down to the 5-minute, find my little thing again. You know, it's a lot more candles because every 5 minutes you get a candle. So now find my little circle again. Now look at that. And you didn't even see it on the higher time frame, right? Now look at how many pips it is, how many pips this correction is. So that's like, oh, that's about 11, 12 pips, right? That's that correction. So knowing that it's causing a correction, so then what happens? So we hit it, it pulls back, and then it tested it again, it pulled back, then it breaks through. And then of course, what should happen, okay, what should happen is it should retest it. So it pushes through and then it'll retest that line. And when it retests it, then we're good for the buy. So this is where you put your market orders in, or if you want to just you just want to take the trade like as a market execution. But if you're looking to do a buy stop or anything, a buy stop, a sell stop, this is where you put your buy orders in. So it'll pack, because why do I put it above where it's been wicking out? I will put it above, you know, that area, because if I'm looking at that, okay, you don't want it to wick up and tap it, right? I don't want it to wick up and tap it. I want to give it space to make sure it's not retesting, and then maybe something to happen and it'll change directions. So that's what that is. So before I keep going and give you another example, questions, comments, testimonies on what we're discussing. So if there was a correction on the 4 hour, well, if that it would be a correction for like the daily or something. So it's always about what's happening on a higher time frame. So if you take if you're not looking, if there's a correction on a 4 hour, you would need to know what's happening on the daily or weekly. So what type of trader are you? So no, I didn't say I wouldn't buy then. I just said I would want it to clear. So look at what happens, right? This one was a really strong trade. Look what happens. Look at this example right here. So it wicked up and it pulled back. It wicked up and it pulled back. It wicked up and it pulled back. It wicked up. Look how many times this thing tested that line. But you notice that each time it tested that line, it came down further. It came down it didn't come down as far. This one almost as far. This one didn't come down as far. So we finally, and look, so because of that, look how strong this breakthrough was. Look how strong, look at how forceful it broke through. So these support and resistance lines, the support and resistance lines are actually the lines that, is holds the market, or those are the one, well, it's going to correct. So kind of think of it like a stoplight in the market or something, So this is normally where orders happen. So remember, you're looking at real transactions. So let's be clear and understand what we're looking at. These are actual trades. Like this, somebody is buying and selling. So what's happening when you turn on Bloomberg, or you can hear like you've watched a movie and like buy, sell, and people are buying and some people are selling, or what's happening to your 401k plans and what's happening with all this stuff, what people are doing with your money. Buy, sell, buy, sell. This is what we're looking at. You're actually the currency flowing. So that's why, like if it's the US 30, you can kind of trade on that, like we talked about with the indices. We can do this on the stocks. We do this on everything. These are actual orders. So these are actual orders. So when you're looking at this, I will want it, like if I was trying to take a buy, if I put in a market order, or for me to take it, I'm gonna want it to pass this point, because you see where it's wicking up. So I don't want to get caught up in it pulling back down here. I don't want to get caught up in that. So, the more you practice, the more it will happen. If you understand it, that's what I mean about developing your skill set. If you understand it, right? If you understand it. Now, do I personally trade off the minute? Unless we're looking at like the indices or gold or something of that nature, that's the only time, because there's too much happening in the market on a 1 minute chart. So think about it like this. Let's put this in perspective, okay? Let's put this in perspective, so I could really make this clear for you guys. Head of the household. Let's think about it like this. This is a 4-hour head of the household. That's the husband, okay? Head of the household, okay? What he say go, right? He's the head of the household, okay? So, and I'm gonna look at it from a biblical standpoint. So that's where we at. So husband, head of the household, right? That's that's that. So what does he say, right? He says we're buying, okay? Then you got the wife. So that's the 1 hour. So if you really want to look at it, so sometimes she bucked the system. You see that? Like, but look, for the most part, like I don't agree with you right now. I don't agree with you right now. I don't agree. But for the most part, what are we doing? We're still buying. So long as they're in Confluence, we have a nice smooth trade. So you notice that if the 4 hour is buying, the hour is selling, that's not a stable household. The husband and the wife not getting along. So what happens? The markets are consolidating. We're not going nowhere. We're not doing anything. So kind of think about it like that. Now, this is the little teenager. The 15-minute is the teenager. So when you look at it, they're all over the place, right? So they're up, they're down, they're feeling good. They don't want to talk to you. They're up, they're down. So just kind of picture it like that. But in the grand scheme of things, they're still going with you. They're going with the 4 hour. They're going with the parents. They're not going against the parents. They're going with the parents. But sometimes they need punishment. They got to be grounded. Their back grades was bad. Kind of if you really want to put it in perspective. So that's that correction. What happens when they act up? They get a correction. So impulse, correction, continuation, correction, continue. Then now they're doing good. They get a correction, continuation, correction, continuation, right? So, and then think about the 5 minute as that little toddler, the baby, or what have you. And so they really, how many times you have to tell them, no, stop. What are you doing? Would you come on? How many times you have to tell them that? So now imagine, what is the 1 minute? What's the 1 minute? What's the 1 minute? I don't care what the 1 minute says. The 1 minute is the baby who doesn't know anything. So they just all over the place, right? So that's where you want to, so when I said, no, you're not trading on the 1 minute, that's why you got to candle every single minute. That's like the baby crying right now. Oh, it's happy. What are you doing? You waking me up in the middle of the night. What are you doing? That's the 1 minute chart. look at how this is. I can't even spread it out, right? So maybe that'll bring some clarity, to what we're talking about. And so why you want to always know where you are in the market. So you always want to know what the parents say. What does the mom and the daddy say? What do the parents say? The mama says this and the daddy says this. And if they in agreement, we got a beautiful household and we're gonna have a beautiful trade. So just really put that in perspective. Nobody listens to the baby. It's like, oh, that's so cute. What are you doing? Right? So yeah, questions, comments, testimonies. Drop it in the chat. Drop it in the chat. Do you guys have more clarity now on how to look at these trades? How you love that analogy. So thank you, thank you. So do you have more clarity now on how to use that 5-minute trigger? And of course, I want to make sure I get your questions answered, and I want to make sure you grasp it from the training this evening. And of course, like I say, next week, we'll touch on these support and resistance lines. Awesome, awesome, awesome. All right. So I do have some time for some questions, but I want to, kind of gear the questions toward the training that we're doing tonight. So we will
Ms.
not.
Dyer.
Yes.
Oh, I forgot. I'm out of protocol. I'm supposed to be dropping my question in the chat. My apologies. The trade
So,
whisperer, please, please don't admonish me right now. But is putting a stop loss in, is that a part of the strategy, Ms. Dyer?
absolutely. That was like one of the first things we covered. So
So
yes,
is
stop
it
loss.
necessary that I use a stop loss, Ms. Dyer?
Absolutely. I'm gonna tell you this.
I'm gonna ask you again, Ms. Dyer. It is, so should I pick and choose when I want to use a stop loss, or is that a part of the strategy so that we can maximize and make sure that we are operating in our risk mitigation factor as well?
Understand this, right? You should always trade, like we've gone over the compounded sheet, but you should always keep in mind from your percentage and risk management for what you're willing to lose. The strategy is back tested at 92%, but you always want to have a stop loss in place because it's in the name, it stops the loss. So we focus on the 92%, but there is that 8% that can manifest. So that's the reality of it. So if you're journaling and you're doing all of that, then you really understand. And that's why that's exactly why we spent the time that we spent, really helping you understand in December how to lay all that out, your online trading journal, those sorts of things. So now you definitely want to make sure that you have a stop loss. It stops the loss, because I can guarantee you this, okay? I will never tell anybody that you'll blow your account, right? You don't, yeah, exactly. You have to have defense. But that is the poorest risk management that you can have. You would rather over leverage than not have a stop loss, but you don't want to do either one. But you would rather over leverage, because I can tell you what, you will be sitting there and that will be moving and it will be going, and you do not have the emotions to close the trade because you don't have it. And you literally sit there and watch this just keep going. So imagine had you taken that sale that we talked about. Now you 200 pips in a hole because you're not going to turn it to close, and you're like, it's going to turn around, it's going to turn around, it's going to turn around, it's going to turn around. No, 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 no. The stop loss, PSAR. The PSAR is called a parabolic stop and reversal. Stop. This is really a trailing stop loss. So what happens when the PSAR flips? It turns around. The trade turns around. That PSAR flip, it turns around. So if we know the PSAR is going to flip or it's going to move, you have to have that stop loss. I mean, so I cannot stress that enough. Stop loss, stop loss, stop loss. If somebody tells you not to trade with a stop loss, turn around and go the other direction. Okay, turn around and go the other direction. If somebody tells you don't worry about a stop loss, turn around and go the other direction. You say past bad habits, absolutely. Is you don't know what, and this is the thing, if somebody tells you that, you have no idea what their account looks like, you don't know what lot size they're using. Their account might be able to handle a 200 pip, pullback, or, and this and this and that, but yours can't. So you say do not collect $200, run fast, just go. Absolutely. So But, and that's the thing. So let me get to this other question, because I'll stay on a stop loss forever, you know, and see, when you got your checking account, you know, when you got your checking account, nobody said, oh, you're going to bounce checks, or, oh, you're going to do this. So there is absolutely no way that you should blow an account. I'm telling you now, it's absolutely no way. If you do that, you need to stop, look at what you're doing, because you have some poor risk management in there somewhere. You know, that's, or you're not taking your time. Remember, patience, profit. So the same way nobody said, oh, you're gonna bounce checks everywhere. If you bouncing checks, you have some poor management in there somewhere, and you need to look at what you're doing. You're not accounting for everything that you write out. And when I say balance a checkbook, you know, I'm not, you know, that I might be telling my age, because some of you guys probably don't even know what a checkbook is, but you know, nobody ever said that. So you don't want to do that. We were taught how to properly balance it. We were taught how to, you know, run the ledger, which is your trading journal. That's your checking journal. We were taught how to do that. And so you should never have bounced checks and done that. So you should never be blowing accounts in. But if you don't put stop loss in, that's what you're going to do. So there is a 8%. I mean, literally, there is a 8%. So let me see. You know, you cannot play football without the linebackers. You're absolutely correct. You got to have that defense. You must have it. So how are you going to make sure you look at the 4 hour? So we will not trade past the first and so I'm trying to make sure I understand this question clearly. We would not trade past the first support and resistance line if the 1 hour and that right. Yes, absolutely. So yes. PSAR, 15-minute chart. Let's go back down here on 15-minute. It's the PSAR. So it's real simple right here. The PSAR, the dots. That's the dots. You notice how as the market flips, okay? As the market flips, what do the dots do? If we're selling, the dots are on the top. If we're buying, the dots are on the bottom. If we're selling, you know, you look at how they just continually flow through. So my stop loss is below the PSAR or above the PSAR, just like the question we had earlier. Somebody said, does it matter how far below? I don't care where you put it, just don't put it on it, okay? Don't put it on it. You notice right here, look at how that PSAR is in alignment where that candle wicked out. Don't put it on it. This actually, there are times, look at this one. You know, doesn't this touch the PSAR? It touches the PSAR sometimes. So you don't want it on the PSAR, you want it above or below the PSAR. So that's, you just line it up, look to the side, grab the number, grab the price. That's the price your stop loss is at. So that's what that is. All right, guys. So, I mean, we can go over this again next week and when we actually look at support and resistance lines. But this is how you really effectively utilize that 5 minute. So when you pull a trigger from here, understand that we need to know where we are in the market and what's actually happening in the market. So hopefully that brought a lot of clarity to you all. Awesome. Thank you. Thank you so much. So don't go anywhere yet though. So hopefully, and so just understand right now, Tuesday, we talked about the BYOB production squad. We talked about the BYOB production squad. You want the residual, you want business, you know, we shared it, you know, where you got Chanel Cooper Sykes, you know, her personal coach and mentor, Mr. Rogers' personal coach and mentor. You know, I've definitely had the experience of being personally coached and mentored by C. Thomas Gambrell, Mr. C. Thomas Gambrell. So if you have not registered, go to our website, BeYourOwnBankMovement.com, get registered. I promise you, it is a life-changing experience. It's definitely something that you want to do. It's not even, it's, you know, you have those things that you should do, but you don't have to do, but you know, you can do, you should do, but you don't have to do. So this is a can do, not a must do, but it's definitely a should do. If you want to break through, transform, and take this to the next dimension, that's definitely something you want to make sure you get registered for. It is going to help you in business as well as your personal life. I guarantee it. It'll be the best investment in yourself that you ever spent. All right. And also pick up a copy of the book, BeYourOwnBankMovement.com. Pick it up. Also, so now